Welcome to the Riskwiser Zone. I'm your host, Louie. Today we're diving into a critical situation that's sending shockwaves through the global energy market. The ongoing conflict in the Middle East has led to a significant disruption in oil and gas supplies, with Iran throttling traffic through the Strait of Hormuz, a crucial waterway that accounts for 20% of the world's oil and gas transit. This has resulted in a massive supply gap, with flows of crude and condensate dropping by around 12 million barrels per day, or approximately 12% of daily global demand. The impact on prices has been dramatic, with benchmark Brent crude hitting a session high of $119 on Thursday, later settling around $109 a barrel. However, the real story is in the physical market, where cargo prices have surged to record highs. Middle East Dubai crude has reached a staggering $166.80 a barrel, while European and African crude cargoes have risen to $120 per barrel. Even Russian barrels, which were previously discounted due to sanctions, have bounced back above $100. Refiners are scrambling to find substitutes for the lost Middle Eastern supply, looking to alternatives like Russian Urals and Norwegian Johan Sverdrup. However, these grades are typically more expensive, and the price differential is widening. The situation is further complicated by the fact that sour oil, which requires more refining, is typically traded at a discount to Brent. But with the current supply constraints, these prices are now at a premium. The ripple effects of this energy crisis are being felt across the globe, with transport fuel prices skyrocketing. Jet fuel in Northwest Europe has hit a record high of around $220 per barrel, while European diesel has breached $200 a barrel for the first time since 2022. Asian fuel prices are also on the rise as refiners cut processing rates. As the situation continues to unfold, it's essential to consider the potential implications for the global economy. The International Energy Agency has announced plans to release 400 million barrels from strategic reserves, and the U.S. has waived sanctions on Russian oil barrels. However, it remains to be seen whether these measures will be enough to stabilize the market. We'll be keeping a close eye on this developing story and exploring its potential impact on stocks and finance in the coming segments. For now, it's clear that the global energy market is facing an unprecedented challenge, and investors would do well to stay informed and adapt their strategies accordingly. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics, where the stakes are high and the players are many. Today, we're looking at a mixed bag of news that's got investors and analysts scratching their heads. Let's start with the jobs market, where we saw some interesting numbers come out recently. The U.S. added more jobs than expected, but the unemployment rate also ticked up. This has left some experts wondering if the labor market is truly as strong as it seems. On one hand, the fact that more people are working is a positive sign for the economy. On the other hand, the rise in unemployment claims suggests that some industries may be feeling the pinch. Meanwhile, in the world of tech, the Magnificent Seven, Tesla, Nvidia, Meta platforms, Microsoft, Amazon, Apple, and Alphabet were all down on the day. This has got some investors worried that the sector may be due for a correction. But it's worth noting that these companies are still incredibly strong, with many of them posting solid earnings reports in recent weeks. In other news, mining stocks took a hit as gold and silver prices fell to 6-week lows. This has been a tough year for miners, who have faced challenges ranging from rising costs to falling demand. But some experts say that the sector may be due for a rebound, particularly if inflation starts to pick up again. On the flip side, AI infrastructure and chip stocks were up on the day, with companies like Seagate Technology Holdings and Lam Research posting solid gains. This is a sector that's been on fire in recent months as investors bet big on the future of artificial intelligence and machine learning. Finally, we saw some interesting moves in the energy sector, where natural gas producers like Cheniere Energy and Antero Resources were up on the day. This comes as tensions between the US and Iran continue to simmer, with some experts warning that a conflict could disrupt global energy supplies. As always, it's a complex and multifaceted landscape out there, with many different factors at play. But one thing is certain, in the world of finance and economics, you've got to be ready for anything. Welcome back to the Riskwiser Zone. Today, we've been discussing various investment strategies and market trends. As we wrap up this episode, let's take a look at some recent news in the financial world. BHAV Acquisition Corp., a special-purpose acquisition company, has announced the closing of its initial public offering, raising $10 million at $10 per unit. The company plans to use these funds to pursue and consummate a business combination, although it has not yet identified a specific target. It's essential for investors to approach such opportunities with caution, considering the risks and uncertainties associated with special-purpose acquisition companies. While some SPACs have been successful in identifying and acquiring promising businesses, others have struggled to find suitable targets or have faced challenges in integrating acquired companies. As we've discussed throughout this episode, it's crucial for investors to conduct thorough research, assess their risk tolerance, and diversify their portfolios to minimize potential losses. In the case of BHAV Acquisition Corp., investors should carefully review the company's prospectus, financial statements, and other publicly available information before making any investment decisions. It's also worth noting that the SEC has declared the registration statement related to this offering effective, and the units have begun trading on the Nasdaq Global Market. However, this does not guarantee the success of the company or the investment. In conclusion, investors should always approach new investment opportunities with a critical eye, considering both the potential benefits and risks. As we've seen time and again, even the most promising investments can come with unexpected challenges. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.